that are happening in the marketplace right now as it relates to real estate, interest rates, what the Fed is doing. We're going to look at some latest conditions as it relates to debt to income ratio and how this could be really keeping millennial home buyers out of the market right now. So, it might seem like it's the dog days of summer right now, but there's a ton of stuff happening. There's a ton of stuff happening on Wall Street and in Washington that we want to get to. And how does it relate to you building wealth in your portfolio? So we're going to get there. Just want to wait till everyone kind of joins us here. So we'll give it a few minutes. So let all the alerts go out on YouTube. Let everyone kind of join us here in the chat room. Hope everyone is doing well. Let us know where you're joining us today from, where in the world you're joining us. Can guys, just let me know in the chat if we are good to go. Can you guys hear us okay? Audio quality okay? All of that good stuff. Let us know. I'm just going to test some graphics here, make sure we're good to go. There we go. Let me know. You guys can see me okay in the chat. So just let me know here in the, I'll bring up the chat room here on the side here. So if you guys just say hello, let us know where you're joining us from. Drop that in the chat on the sidebar here. Audio is good. Missy, good to see you. Good to see you, Mario from Colorado Springs. M. Hafer. Good to see you. Good. Lindsay says, video are great. Audio and video is good from Boston. Thank you so much. Aloha from Hawaii. What time is it in Hawaii right now? Champaign, Illinois. Marcus, good to see you. Washington, Pennsylvania. It's been a few years since I've been out to Washington, Pennsylvania. I grew up on the eastern part of the state. But Robert Dixon, good to see you from the UK. What does the real estate market look like in the UK right now? And I see in the UK, we got an alert that the United Kingdom is like going to start going door to door to kill chickens under the auspices of bird flu. This is the tyranny of these governments. It's crazy. Emilio Formiga, nice to see you in Portugal. Bom dia. Tudo bem? Cole Faris, nice to see you. Good morning from Bulgaria, Mr. Nobody. Good to see you. Jamal in Atlanta, Georgia. Oh, it's almost 5 in the morning out there in Hawaii. It's going to pot, not the greatest, Robert says. Yeah, in the UK. Going to be there in a few weeks, actually. But I was up in the UK. I was up in Scotland for a few weeks, just recently with the children there for a camp. So that was nice. It's so funny to go to Scotland in the summer because you just need to bring a coat, And I was sitting by the fire and reading my books and getting some good work done. It was nice. Good morning, Nicole. Good to see you, young lass. Bill Monty is in New Jersey. Good to see you, Bill. Tik Meng Chin is in Cambodia. Cambodia, really interesting moment right now geopolitically. Hey, Haley, good to see you from Florida. Good to see you. Oh, Robert, you're in Scotland right now working. Yeah, I was up near Crieff in Scotland. It was quite beautiful. Very, very beautiful. My kids want to go back there next summer. So they went with a bunch of friends to this camp, and they loved it. And all of their friends said they want to go back next year. So I guess we're pretty much in on that now, right? Cole Ferris says, yeah, all of my credit unions on my list of lenders have raised rates in the last few days. Rough. Yep, they're going up. So we're going to look at all of that. We're going to look at a lot of these pieces today. And right now, internally at our team at Morris Invest, we've got some amazing new construction properties. And it's kind of amazing because we have a wait list now. So I just want to say this kind of at the top here. I'm going to cut this off. I'm going to edit this out once we edit this live stream later. But just want to let any of you guys know right now who are watching, if you're interested in investing in real estate and you want to work with our team at Morris Invest, full service team, building brand new construction properties from the ground up with our team from Sedera Wealth. And we have a wait list right now because of the demand for properties. The demand for real estate right now is off the charts. And here's a little secret we're going to get into today's show, and this is the secret developers aren't even telling you right now, is that they're not building right now. A lot of developers have pulled back on building. But, which we'll talk about, they're buying a lot of land and they're trying to lock in these prices right now because the demand is still off the charts. And now interest rates are going up. Developers are pulling back on building. What do you think's going to happen? What do you think's going to happen? Millennials can't buy. They're being priced out again because of higher interest rates. Just when you thought they might have a chance to get back in, nope. So really, it's savvy investors who are picking up real estate right now. It's people who understand what's going on. I was talking to our accountant, one of the smartest tax accountants in the world. He said, yeah, a lot of his clients right now are buying up real estate and hard assets right now because of the volatility. We could be in a bubble in the stock market. We're going to talk about price to earnings ratio right now on the stock market. We're going to talk about all of it today. There's just a ton of pent up. You can see how I'm excited because we got a lot of stuff to talk about. But anyway, if you are interested in working with our team, I would just please do this right now. Go to our website and at least get on the wait list to book a call with our team. So go to morrisinvest.com and there's right in the middle of the screen, there's like a book a call button. Actually, I'll just show you here what it looks like on the screen. So this is what it looks like on the screen. And let me pull this off here so you can see it better. Can you see that? Yeah, there we go. So right there in the middle of the screen is the book a call button. Just click on that. And what'll happen is a little pop-up window will pop up and you have to fill in like 7 questions or answer 7 questions. Very, very simple stuff. Just, your name, email, et cetera, but just a little bit of history about where you are as an investor. And then a little calendar will pop up and then you can book a call with our team. And pick a time on your calendar that works best for you, and then one of our team members will give you a call, and we'll talk about our new construction properties. So, but I wanted to get that in beforehand, just in case anyone wants to do that. Get on our wait list right now before the end of summer here. So, all right. Here from Florida, good to see you guys. Let us know where you're all joining us from, and then we're going to get started here in about 1 minute. 1 minute. Let's see here. Brandon. Oh, no, sorry. That's the old messages. Brandon Powers is here. Paul. Yes, we have in the past, but it's not an area that we currently invest in. It's just, it hasn't made sense for us. It hasn't made sense for us. To be honest with you, one of the big issues in Florida is contractors. And we have an excellent building team. And it's very difficult in Florida. And the team of builders that we have are top notch. So it's very hard to replicate that. And Florida just has some other big insurance issues that are not attractive to us either. Good to see you, Joyce. Good to see all of you guys. Georgia. Niho Wetel from Florida, South Africa in the house. Good to see all of you guys today. Good. All right. Okie dokie. Okay. All right, here we go, guys. You guys ready? Buckle your pants up. Get out a pen. Yeah, I see from our team in the chat right now, and our team is there to help. By the way, in the chat, so we've got George, we've got Haley, we've got Nicole, Lindsay, so they can definitely help you with any questions you have here in the chat room today. All right. Guys, ready? Buckle your pants up. Here we go. And get out a pen or pencil too, because I'm going to go over some important data points today that I think are important to help educate you on what's happening in the marketplace. And this is fresh data, like fresh as of this morning data. Just talking with an investor buddy of mine a few minutes ago, and this debt to income ratio issue is a huge problem. Huge problem. All right, let's get into it. Well, this could be the perfect time to buy because the Fed has just done something that they haven't done in decades, literally like 22 years, and raising interest rates up to 5.5%. But what's really happening, though, behind the scenes is, in fact, perhaps more troubling as it relates to the stock market and sort of what we could consider like a bubble market right now. So we're going to get into all of it on today's show, talking about real estate, talking about hard assets versus what's happening on Wall Street right now. So a couple of data points. Let's just talk about inventory on the housing side for a second right now. Inventory in the housing market is approximately 46% below the historical average dating back to about 1999. 46%. And we think that this is highly unlikely that the inventory problem is going to be resolved anytime soon. And here's why. So first of all, let's just talk about the inventory section of the economy right now. We have what the Fed is doing, raising interest rates, the benchmark Federal Reserve rate, okay, by which everything else is then raised. So credit cards, banks, we just had someone in our chat room just tell us that their credit union just raised rates again. So you're going to see across the board right now interest rates going up from everything, car loans, home loans, credit cards, everything, okay? And of course, the federal benchmark rate, 5.5%. Now, this is going to largely be the last interest rate hike probably this year, and hopefully the last one for any number of years, we hope, on the Fed side of things. But what this is, first of all, is an admission from the Fed that they have to devalue the U.S. currency because they cannot afford to pay the interest payments on our debt right now, which is pushing towards $1 trillion. Just the interest payments alone on the national debt. Now, Fitch earlier this week lowered the credit rating of the United States from AAA to AA plus. AA plus, I think, is the new rating. Now, I know Kramer and CNBC and these other guys on Wall Street are like, it's no big deal. But what you're admitting, and what they admitted, is that the debt of the United States is too high. It's unsustainable. So they lowered the credit rating. And even like AA plus, you think the United States is AA plus credit? Okay. Anyway, that's been lowered this week because of the amount of debt. So trying to service this debt, this is how the Fed is trying to wrap their hands around this right now by devaluing the US dollar, which is why I am incredibly bullish on real estate. Natalie and I right now buying 4 properties as we speak, literally today, made a deposit on this to start the process of acquiring 4 additional properties, single families. And so that's what we're doing right now because of where we are in this market and the demand is off the charts. We also just doubled down on some precious metals as well. So again, real tangible assets, real estate, gold, silver. Okay. So let's just talk about the inventory piece of this now. So one thing that if you're looking what's happening right now in the marketplace, you're going to notice right now in the market that a lot of builders are pulling back. A lot of builders are pulling back on building. Why are they doing this? Because of interest rates. And so if they're attempting to reach, and a lot of builders, of course, really love to hit that first-time home buyer market. Now, what's different from like what our company does as investors is that we're building single-family homes and duplexes, but we're not servicing first-time home buyers. So the difference from an investment perspective, people who are like what we do is build homes for investors to buy and then rent, and then they rent it out, right? At Morris Invest, that's what we do. But many, many builders are building these single-family homes for first-time home buyers. They're building them for millennials, right? The first-time home buyer, the 3-bedroom or even 4-bedroom houses, mostly 3 bedrooms, and they're pulling back on that. And then what you see is booming is the luxury market. So you see this big disconnect right now, and you see big McMansions going up all over the place, right? The 800,000, 700, 800,000 plus homes going up, and those will sell. There's huge demand for them. Those will sell just fine. But it's the millennial purchases right now, the millennial homes that are really being squeezed. And so a lot of developers who are building for the retail market are pulling back. But what's interesting is they know this is all cyclical. They're pulling back on building because of the interest rates, but they're buying up land, getting in and locking in great prices right now on land so that as soon as these interest rates drop a little bit, the building kicks off. But what this does is it creates an enormous bottleneck because it takes a long time to get permits approved and go through this process. So with permits now being pulled back, building has slowed down. The demand is already at off the charts. 4.3 million homes we need in the United States. So if you see people talking about like a big housing recession or a big what, there's so much nuance to this discussion. When someone says something like that, well, what do you mean? What exactly do you mean housing recession or housing bubble or housing crisis? Are we at the bottom? Are we at the top? Where are we right now? It's market to market to market, and it's retail versus investor. It's commercial versus residential. There's so many nuances to this discussion. So as an investor, for me, it's a perfect time to buy. This might be one of the best times to buy real estate. This is why we have a waiting list right now for people to buy our new construction properties, because they understand the demand for them. And what happens when interest rates drop a little bit, and we're already seeing bidding wars, guys. So when you have these homes coming across the finish line right now, I was looking at data this week, the number of bidding wars is increasing dramatically, especially in suburbs. So in the suburbs, you're seeing people being, like normally where there would be like one or two people competing for a property, there's 5, 6, 7, 8, 9, 10, 12 contracts coming in for a property. So it's incredibly tight. The inventory is incredibly tight right now. On top of that, you think about this Zillow analysis, we still need 4.3 million properties just to even break even, just to get back to where we don't have a crisis. There's simply not enough homes for millions of people. It's just the way it is in the United States. Unless we address this sort of shortage of the smaller, more affordable sort of starter homes, what's going to happen is people are going to be renting for a very long time. That's just what's happening. And with higher interest rates, you're going to see more and more people renting for longer and longer. So there was some hope for millennials that, hey, they'd be able to pull back. They'd be able to get back into the market now because these interest rates had dropped a little bit. Sorry, it's not happening. It's not happening. So if you could have afforded a mortgage at say $1,200, $1,300 a month, and now the interest rates are so much higher that it's pushed it up to $1,600 a month for your monthly payment for your mortgage, you're done. You can't do it. You can't afford it. It's an additional $200, $300 a month. That's what the difference is in some of these mortgage payments now. You go even higher than that, $700, $800 a month. That's just because they raised interest rates. The house is the same. The interest rates are higher. The money from the banks is different, more difficult. That's exactly what's happening. So, again, we have this issue right now. And as Ken Davis says here, Morris, as a retired fellow with an economics degree, we used to realize that this is called monetizing the debt. Mm-hmm. Exactly. And as soon as you sign for a loan, the bank creates money. That's exactly right. Peace Jen says. So what these banks are able to do, these banks are able to take your down payment amount. They're able to, when you create this mortgage, they're able to sell it off, and they're able to immediately make money off of that. So again, the banks are in a position where the lending restrictions have gotten much tighter over the past couple of weeks. This has been confirmed in data that we're seeing out this morning. So banks have really pulled back on some of the lending restrictions. Really increased the lending restrictions. So it's more difficult. We thought, this might be a better time. No. So when I see all of these constrictions right now, this is when I get excited. This is when I get excited as an investor, because to me, the deal still needs to make sense. So at the heart of it, like, what is the deal? What is the property? Let me just give an example. I mean, if we just look at some of the properties that we have, like at Morris Invest, like some of the new construction properties, I'm going to pull up a video here just of like some of the ones that they're building right now. And these just completed. So these are properties that our investors can buy right now. But these are new construction homes in West Texas and Missouri, single families, duplexes, beautiful fit and finish. These are for rent, though. These are not for purchasing for people to buy, to live in as a retail investment. These are rental investments that, one of our investors would buy the property, they'll live thousands of miles away, and then our team handles the rest of it, full service, and then they would rent this out to a tenant. And it's fully managed with a property management team. But again, this is a totally different market this housing market here in renting in West Texas and purchasing for investment properties is totally different than the retail market that you see headlines on CNBC about. It's a totally different market. Totally different. So when you hear Boise, Idaho, and you hear these other markets talk, people talking about these, you're seeing some prices coming down because, there's maybe higher interest rates. The bottom line is there's more competition. So prices haven't really come down in a lot of these markets. They've really got into bidding wars. So there's a lot of crazy nuance to this story, and it's not as cut and dry as some would have you believe. But let's just talk a little bit about Wall Street. Let's just talk a little bit about what's going on in Wall Street right now. So when you see on the housing side, hard assets that I invest in, and then you see what's happening in the stock market, some economists are now looking at a bubble in certain quarters of the stock market, particularly in AI. So what's going on in Wall Street right now? Well, you're seeing like kind of a big boom in stocks right now. And you had all of this cash sitting on the sidelines because people had oversold the stock market. The stock market was in the toilet over the past year because it was oversold. People just sold a ton of stocks. So then they were sitting on all this cash and they were waiting to deploy it. They certainly were not in crypto, and they were sitting on all this cash, and a lot of them bought up real estate. But a lot of them held back and were waiting to, they don't invest in real estate. They were waiting to deploy it back into the stock market again. And they suddenly have now in AI stocks. So you see a lot of technology stocks booming. You see a lot of artificial intelligence stocks booming. And you see AI related stocks booming, like NVIDIA, for example. Here's a perfect example, NVIDIA. If you've been paying attention to this stock, talk about a bubble in a stock. Holy smokes. Is it really worth what it's trading at right now? I don't know. You tell me. But all of this money now pours into these AI stocks. And now, instead of a normal sort of comfortable price to earnings ratio for a stock, when you look at a stock and it's like between 8 and maybe upwards of 15% price to earnings, that's like kind of a normal range, right? Like what is the price of the stock versus their earnings, and then with a multiplier, right? So is it 10 times earnings that's what this company is worth? Is it really 15 times earnings? Like that's stretching it. Like when you go to sell a company, if you own a company and try to sell it, typically you're looking at like 10 times earnings to get an idea of how much the value of that company is. So pushing it to 15, a little bit of a stretch there, right? Normally 8 to 15 though, that's kind of the range. You have certain companies now, I think like NVIDIA, it's like 30, you have some companies that are 30 times earnings right now, price to income, the PE ratio, 30 times. How is that sustainable? So when you hear people talking about a potential collapse or crash, I would absolutely be looking at Wall Street with all of this fake money that's floated into Wall Street with these like AI stocks. It reminds me a lot of the dot-com bubble in 1999 into 2000. It reminds me a lot of the dot-com bubble. Like, really? Is there that much value in all of these AI companies? Really? Who's running these companies? They have any track record? They just kind of pop up out of nowhere. And so then you have like chip manufacturers and you have computer manufacturers that are really fueling this AI boom. Really? Is it all that it's cracked up to be? So I think you're going to see a lot of Wall Street trouble potentially very, very soon as those chickens come home to roost, which is why, again, I want to make sure that a huge portion of my portfolio is in real estate, is in hard assets that are a hedge against this craziness. So again, let's talk about, so we talked about residential versus, we talked about investing properties versus retail. Again, two different worlds. I wish I could really drive this home to people. What we do, the properties that I buy, are investment properties. And they're in boring markets. Okay, they're not flashy like Las Vegas. They're not flashy like Boise, Idaho, where things are overpriced, and they're not flashy like Salt Lake City and all these kind of places, right? No, they're in boring areas that have low crime, high job growth, diversity of employment, very low vacancy rates, and just boring. Like they're not in major cities. They're sort of like the exurbs. They're like the city, 45 minutes away from the big city. These are areas that are growing and growing and growing, like, outside of Dallas, Texas, outside of Austin, Texas, hours away from those spaces where now you're suddenly seeing a lot of growth in Lubbock, Texas, and Odessa, Midland, Joplin, Missouri, those types of places. Outside of major city hubs where you have incredible demand for rental properties, incredible demand for properties because there's a lot of job growth. That's the the investing piece of this. And then you have the CNBC headlines about housing for residential home buyers, news segments. Totally different. Totally different. So I hope all of you, when you see these headlines and you read, housing related stories in the Wall Street Journal or CNBC or whatever, you have to ask yourself when they mention certain cities, well, is this for an investor or is this a retail buyer? Like if they're talking about Boise, Idaho, and they're talking about, these types of places, Spokane, Washington, things like that, you can immediately, alarm bells should go off. That has nothing to do with what we do here. Nothing. Zero. Honestly, it's totally different. Very, very important. Another big piece of the story is commercial. And again, that has nothing to do with what I do. I don't invest in commercial properties, office spaces and things like that. I don't. The largest property I ever bought, Natalie and I bought years ago, was an 8-unit. And that qualifies as commercial. And we since have sold that property. I don't like doing it. Doesn't fit with my mold of investing. I want long-term renters in nice single-family homes with a driveway and a backyard where families tend to stay a very long time. They have a great home and a great school district. That's what I like. When you get into these larger commercial properties, it's more transient. Tenants don't tend to stay as long. And also office spaces, stuff like that. I'm not buying office spaces. I'm not renting out office spaces. But we are seeing huge trouble in the commercial property zone right now. And, when you see all of these vacant office buildings and all of these small banks that are about to do refinances for these owners, and these small banks are saying, sorry, we can't do it. We're in the red right now. We can't do a refinance on your office building. And we're not going to because we don't believe, number one, we can't afford it. And also the value of that office building has plummeted. So you're going to see a lot of foreclosures in the commercial space. And then who's going to swoop in and buy them up? BlackRock. They'll swoop in, buy them up. It's like they bought up all of Ukraine after the United States destroyed Ukraine, through its proxy war. So then you have these big companies, companies like Vanguard and BlackRock. They come in and they buy them up for pennies on the dollar. They swoop in. Bill Gates swoops in, buys them up. He waits for all the destruction, swoops in, buys them up. And then they'll convert them into warehouse space. They'll turn these offices into warehouse space for like Amazon distribution centers and things like that. So that's what's happening in the commercial space. Totally different than what's happening in the residential space. But I should, point out that our team at Morris Invest focuses on residential homes that people need to live in long term. And we also don't take a piece of that property. So like our team, if an investor works with us, they own the property 100%. 100%. You'll also have a clear picture of all of the upcoming payments over the life of the loan of the property. There's no surprises or hidden fees or anything like that when you work with our team at Morris Invest, like you're seeing in the commercial market right now. But I just want to say this. We are looking right now for people who understand the market and who understand that we build our properties below the median price. And that's how we're able to bring value directly to our clients. So when you buy a new construction property with our team, what you're getting is a property that is below the median value price. So you're not paying higher than the appraised value of the house, which is madness to me. When you're buying a property, it should be at the appraised value or below the appraised value. So you get in built-in equity when you close on the property. It's just madness to me that some people will pay like 20 or 10%, 20% more than the appraised value. Why would they do that? They're doing it because it's so hard to get properties right now. Well, we do not believe in that. We do not believe in that, and don't do it. Our current clients are with us for a reason. They've been with us for many, many years. We've got great clients at Morris Invest. They understand the power of real estate investing. They understand that they know that this is a long-term play. You cannot look at the volatility that you're seeing right now in interest rates and say, well, this is a reason for me to sell my real estate properties. No. Natalie and I are adding 4 properties to our portfolio as we speak. The last thing that we're doing is selling off our properties. We're doubling down on real estate right now because of the demand and this hedge against inflation. We have persistently right now low housing affordability in 2023. And it's right now leading to a surge in rental properties, a demand for rental properties. So first-time home buyers who can't get into a home and can't buy it, they need to rent. So the demand for rentals is off the charts, and it's not going to slow down anytime soon. Just want you to understand that. Fewer Americans, unfortunately, able to buy a home. Investing in rental properties in attractive neighborhoods is going to, can attract long-term residents. And that's why we have such low vacancy rates right now. And so like as Joel says in our chat here, Joel Schwartz says, hey, Clayton, I received an email from us regarding signing up to set up a call to discuss your new construction properties that will be available soon. But with the response from your team, I'm sorry, Joel, I didn't quite get the question. Did you connect with our team yet? Let me just show you how to do that, Joel. Here's the easiest way to do that. If you want to book a call with our team right now, here's all you have to do is let me just put this up on the screen. Here's our website. It's very simple to do. Just go over to our website and see that big book a call button. If you go to morrisinvest.com, click on that book a call button right there on the screen, and a little calendar will pop up. Okay. Very simple to do. And then you pick the time on the calendar that suits you. But Joel, just let our team know, like we have a bunch of team members who are watching right now in the chat room, so they'll be happy to help you, take care of you, and get you started. So you just schedule a call. We'll go over like what your current finances look like. We build a custom plan for you. This is not a one size fits all thing. We want to get to know you, understand what your goals are. What is your freedom number? How many rental properties would it take for you to achieve financial freedom? Is it 4 properties? Is it 5? So that you own 5 rental properties that are producing, $1,000 a month in cash flow. You've got $5,000 a month in cash flow now coming in every month. Would that change your life? Then what are the expenses you currently have? We would look at all of that and help you out. So again, just go to our website, morrisinvest.com, click on that book a call button, and it'll ask you there. We begin with 7 questions. So just click on that, and then it'll ask your name, your email, and make sure you put in your proper phone number. Okay. That's very, very important. We have people that they're like, I scheduled a call with you, but no one called me. And then they look back and they put in the wrong phone number. So please just make sure you put in the right phone number, and our team will call you, and we'll go from there. So very, very important to do that. So, again, I think it's important. It's really important right now to look at what's happening in this market and to understand the nuances of it. You've got the Federal Reserve raising rates to 5.5%. The benchmark rate is lifting everything else up with it. Credit card loans, auto loans, home loans, everything. And now the underlying story here that I wanted to get to is also about the debt to income ratio. The debt to income ratio now is at the highest it's ever been in the United States. You have to go back, I think, to 2007 actually to get as close to the debt to income ratio right now for Americans, which is extraordinary, over about 40%. So huge chunk of all of the money that comes into a family in America right now is going out to their debt. And so that's fully keeping not only our interest rates so high, but it's fully keeping first-time home buyers out of the market. They are really screwed right now. There's a lot of people that are really, really screwed in the United States. And so that's why you're seeing this boom right now in housing. I know it seems odd, right? But you have the builders that aren't building. They're pulling back on building because first-time home buyers can't afford it. Interest rates are higher. Inflation is high, and smart investors know that buying real estate is an amazing hedge against inflation. So that's why you're seeing this boom in the housing market in a way. It's really, really bizarre. We are at a really bizarre moment, I would say, because normally it'd say, oh, higher interest rates, high debt to income ratio, housing prices then would likely plummet and no one would be buying homes. But that's not what's happening. It's not. And it's just a really stunning moment right now. So I think a lot of really smart investors understand the value of these hard assets. And I got to say, when you look at what's happening in the stock market, it's really, really scary right now. Really scary to see this sort of bubble experience that we're seeing in the stock market. I do want to get to a lot of your questions here. So please get ready with your questions. And I want to open this up. And we got some great questions here. I'll try to go through from Doug, Ken. I'll try to hit a lot of your questions here. As Doug says, like in the chat, Doug says, boring places is where the money is for rentals. Yes, you get it. He says, I invested in an old houses 45 minutes outside of Indianapolis, and my ROI is averaging 22% and is secured by real estate plus holds 43% average equity positions. That's amazing, Doug. Way to go, man. Yeah, and like our properties at Morris Invest, we try to hit a minimum internal rate of return, new construction, built from the ground up, brand new, with an internal rate of return of 18%. So we want you to keep your own money and use the bank's money. And we work with over 100 different lenders to help you do that. Let's see here. Another one from Doug. Doug, how long have you seen that shift? I'm wondering if that's a pre or post-pandemic shift. Are you referring to what specifically, Doug, are you talking about? Are you talking about the shift to the suburbs? Because I've seen recent data as a few weeks ago on the shift out of the city is happening, and it's continuing to happen. More and more people are moving out of the city into the suburbs. And now what you're seeing is instead of, when you used to like live in the suburbs and you would drive to the city to go to the really nice restaurants. Well, the Wall Street Journal just had a piece, I think a few weeks ago, talking about how a number of high-end restaurant chains and just high-end restaurants that aren't chains are now moving out to the suburbs. They're finding more affordable leases, more affordable real estate, and their clients live in the suburbs. So they are getting out of the city. Cities are crime-ridden across the United States. I don't know if you've been to Philadelphia recently. You've been to Chicago or San Francisco, or it's like hell on earth right now. Walking zombies and people just shooting up on the streets and tent cities. It's a disaster what they've done to these cities. So that's why there's this huge push out into the suburbs, and you're seeing this with high-end restaurants, high-end retailers. It's a bizarre exodus. Again, like I said, you used to drive 40 minutes to drive into New York City to go to the really great restaurants, and that's still, New York's a different animal, right? But you used to spend that time to go, take the train into the city to go to the theater and then go to the really nice restaurant. But now a lot of these restaurants are migrating out into the suburbs, and that's where their clients are. It's really interesting. It's really interesting to watch what's happening here. Let's see here. Here's another question from, sorry, Doug. I keep putting you up. I thought this was somebody else, but I'll give you another one here. It says, I've been investing for 6 years now. Only difference since COVID is inventory has gone way down and prices are up. Exactly, right? So inventory is plummeted. Like if you're trying to find like fixer-uppers, like what Doug, I think Doug, that's what you're doing. Good luck. Good luck. The fixer-uppers that you're going to be able to find are going to be in the commercial space real soon with foreclosures on that side. But if finding like fixer-upper properties on the residential side, no way. Good luck, especially in the markets that make sense. That's why a couple of years ago, my team, we got savvy and we started building brand new construction. We did it for a number of reasons. Number one, we could build like 40 properties at one time. And also, we're able to then provide an additional amazing tax benefit to our clients because of a cost segregation analysis that they're able to get if they're a full-time real estate investor. So many benefits of that. And plus, there's not as many variables as well, not as many variables when you're dealing with new construction. You put in a brand new furnace, brand new water heater, everything's the same, new granite countertops, great flooring, all electricals brand new. So we've done thousands of properties over the years where we did renovations. And oh my God, you'd go in with a target number of the renovation and then you'd start ripping the walls out and you'd find a disaster and it would just drive the cost through the roof. So you have to be really good at that. It's very difficult. Joel says you've been waiting for a response from our team, but you haven't been able to reach out. Okay, you've tried a few times to reach out. All right, Joel, well, we'll find out what's going on there. Maybe there's can you confirm, our team will try to make sure and get contact with you, but if you don't hear from them today for some reason, and they will, please book another call with us. Make sure your email is correct. Sometimes people they put one little thing of their email wrong, and then we can't reach you. Or sometimes they'll put one number of their phone number wrong, and then we can't reach you. So if you don't hear from us today, please, and also check your spam folder. I mean, something like that could have happened as well. But if you don't hear from us today, please book another call with us, and we will make sure your phone number is correct and your email is correct on our website. Hope that helps. Let's see. Thank you. Jan wants to know, is it Jan or Jan? All you need to do, just come on over to our website. Just go to morrisinvest.com. Here it is. And there's a big book a call button right in the middle of the screen here, Jan. I'll put the website up on the screen. Just click that and fill in your information and then book a call with our team. That's very, very simple to do. So here it is. Here's the website, morrisinvest.com. That's my website. You can watch the videos. We have tons of testimonials on there from our clients. We have tons of great blog posts. All of that stuff is right there. So please check that out. Please check that out. That's right. Get some more questions in here. Ken Davis says, even folks with not a lot of money can get into this game. Clayton has provided a number of approaches. And again, I don't do business with Clayton, but he is teaching good stuff. Thanks, Ken. Appreciate that. There's so many. My channel here has so many resources for you to get started. It's all free. It's all free. Whether you work with us or not. Like I said, we're very selective with who we work with. We don't just work with random people. Like, we want you to qualify to work with us. There's certain things that we need to make sure that you're a fit for us. So we don't work with a lot of people. Let's just be very clear about that. So there's tons of free resources on our website and our YouTube channel that you might never work with us. That's great. But at least there's amazing tools and resources for you to educate yourself on all of these things. Yeah, we talk about raising money, partnering, etc. Susan, thank you. Thank you, Susan. That's very kind of you. Says, my spouse and I have been working with you and Sadira for 5 years now. Great deals plus incentives. The team is fantastic. Some of the top performing properties in our investment portfolio. Thank you so much, Susan. That means a lot. It really does. We go to incredible lengths to make sure that that's the case. Thank you so much, Susan. Very sweet of you. Let's see here. Yes, Arthur says buy. Exactly. Right now is the time to buy. Here's a good question. Tra says, hey, Clayton, do you know of a bank that would give me lower interest rates on HELOCs? The banks in my town are charging between 7 and 8%. Why don't you book a call with our team and we'll talk we'll see if one of our team members can help you with that. Again, it's free to talk to our team. Like, we're happy to help you, okay? Just book a call with our team and we'll see because we work with a lot of different lenders. so we can talk about what your situation is and we can try to help point you in the right direction of a good lender. Okay. So just go to our website and book a free call with our team. Okay. And I'll try to help you that way. Because again, my team, the people who are here in the chat with us right now, our team members, we work with over 100 different lenders. So they're going to be able to tell you some different information than I can. They're up on all of this. Okay. Thank you for that. Good question. Here's a great question. Jamari Hogan says, big fan here. Thank you, Jamari. Am I saying your name right? Hope I am. How is buy and hold real estate a good investment against a declining U.S. dollar when rent from your tenant is paid in U.S. currency? Great question. Great question. Can anyone answer that question for Jamari in the chat room? Just fire your answers into the chat room right now. I'd love to hear your responses on that, but I'll give you my response. Remember that the investment is in a physical structure. You're buying land, you're buying a home, right? You're buying an actual physical item, which in and of itself, the value is a hedge against inflation. Okay, that's one big piece of it. So remember, real estate investing pays you in multiple ways. It pays you in equity, it pays you in appreciation, it pays you in cash flow, it pays you in tax benefits. And you've got to think about it in terms of multiple avenues of investing and how it's paying you. So if the power of the US dollar right now, actually the US dollar compared to like the British pound against the euro is actually gotten much stronger. So it's crazy how this works, right? The underlying fundamentals though of where the US dollar is when you're talking about like Africa abandoning the US dollar and moving towards the Chinese yuan and moving towards the Russian ruble. And there's a gold-backed currency. The United States is backed by debt. That's all still very true. The US dollar is not going anywhere anytime soon. What it's doing is it's losing its stature around the world as the reserve currency of the world, but it's not going to go anywhere anytime soon. Maybe in, I don't know, decades perhaps, maybe less. I don't exactly know what's going to happen to it. But what you have to understand is the real estate itself is not the US dollar. You're buying a tangible asset that's producing monthly cash flow. And owning real estate in the United States, it offsets your income that you're making from your day job. So now you're paying less taxes by owning real estate. You should be paying no taxes, actually. If you own real estate and do it correctly, you should be paying zero. So the cash flow is amazing. And of course, you're going to get to a point when the cash flow becomes an important piece of the puzzle. But when you're in the multiple stages of investing, you're in the buy, own, and then cash flow stage. You're in the buy phase at the beginning. Then you're in the own phase once it's paid off. Then you're in the cash flow stage later on. So even if the US dollar loses value in terms of buying power, it's still owning the real estate that is the tax benefit and is the equity position that you have that is a powerful wealth building tool. Imagine then you take the equity out of that property to buy additional real estate. And so when a wealthy person thinks of wealth, what they're doing is they're looking at their balance sheet. So like Natalie and I this morning for the start of the month, we just had a big meeting this morning to go over our balance sheet and look at how much our net worth has grown over the past 5 months or a few months, right? And what we're looking at is our net worth, our asset column. So how many assets do you own? How many pieces of real estate do you own? That's how you measure wealth. That's very, very important. So it's a great question. But don't be so limited in scope to just think about the US dollar piece of this and its buying power around the world compared with the euro, et cetera, and inflation. But you own the real estate because it's a hedge against inflation. So all of these things you need to take into account, not just the value of 4 quarters and $1. Hope that makes sense. And then, of course, as you receive that cash flow from these properties, taking that cash away from US dollars and putting it back into the market again, putting it back into real estate or gold and silver. important. Brandon, great question here, says, so am I understanding correctly? It wouldn't be in my best interest to buy a first home to live in, just invest. Brandon, you hit the nail on the head. You absolutely got it correct. I know I don't make any friends when I say this, but it's the truth. You can hate me for it, but it's the truth. Buying the home you live in is not a performing asset. The home you live in is, well, it's not producing cash flow, right? It's not. So imagine taking all of that money for a down payment that you could have had and instead put it into, you go and rent a property right now, go and live and rent, take that money and cash and as a down payment and put it into cash flowing real estate as an investment. That's the really smart move. I have an investor friend who owns 270 properties, and he does not own the home he lives in. Think about that for a second. He owns all of these properties, but he doesn't own the home he lives in because he knows that it's a liability in many ways. You're paying property taxes on it. It's not producing monthly cash flow. It's taking money out of your pocket. So he rents the home he lives in. He lives in Malibu. He's got a beautiful home that he rents with an infinity pool that looks out over the ocean. He rents it. When there's maintenance, he doesn't have to deal with it. The landlord does. And he owns over 260 properties that produce the monthly cash flow for him to live wherever he wants without having to carry a mortgage on a place he lives in. So how do you, if you own a home, though, turn that into a bit of an asset that you can use for investing in real estate? Like if you own a property, you own it for $200,000, you only owe $100 on it. How can you use that equity that you built up to invest in real estate? Take out some of that equity through a home equity line of credit and go and buy real estate. So it's not the worst thing in the world to own the home you live in. But if you are thinking strategically about how to build wealth correctly with higher interest rates, like why would you pay all these higher interest rates to live in the home and not have it produce cash flow? Yes, things to think about, Brandon. Great question. Yeah, and as Ken points out, Jamari, also you get to raise rent every year based on, declining US dollar, inflation. That's where rents go up. I mean, that's a sad state of affairs, but that's it, Alberto says, where do we have properties available? And we are in West Texas where we build our properties, and also in Missouri. That's our main markets. Arthur wants to know, strip club real estate is profitable. I have no idea, to be honest with you. JZ123 says, anyone have a current number for a Morris Invest partner? My phone number doesn't seem to be working, and the number on their website is also not working. We don't actually have a phone number on our website. We shouldn't have a phone number on our website. I don't see a phone number on our website. Just come over to morrisinvest.com. The best thing to do, JZJ123, is just come over to our website, click on the book a free call button, and just book a call there. And put in your correct phone number and your correct email address, and then one of our team members will call you. Not sure what contact you had at our team that wasn't working, but Ryan, yes, I think we do. We have a portfolio program. So just reach out to our team. Ryan was asking about a bulk discount. The thing is, our properties are already discounted because we build in bulk. So you're getting a property at or below the appraised value, where you're not going to be able to get this anywhere else. We have competitors, and it drives me bonkers. It absolutely, Ryan, it drives me bonkers. We have competitors that will charge a fee to work with them. They'll charge like a $10,000 fee just to work with them, and they'll charge you more than the property is worth. And they claim that it's because you get to work with us. And I find that to be so awful. I really, really do. I find it to be just incredibly offensive. So We just opt to do it differently. So our stuff is already deeply discounted. Trust me. But yeah, we do portfolio programs. Arthur wants to know, does real estate help you pick up women? Arthur, you're really focused on the important stuff. Well, actually, a good question. I mean, it depends on what kind of a man you want to be, you know? Like, we've gotten so far away in the United States from caring what a man is, right? We're like the feminization of men in the United States. So we want them to be weaker, and we don't want them to provide for their families. And we think that that's not something that's important anymore. And I absolutely think it is. Men should be men. They should be providers. They should work their asses off. Absolutely. And women will find that attractive. That's the truth. Women don't like lazy people. And if they see a man who has built up a portfolio of rental properties and works hard, yeah, that's attractive to a woman. Bottom line. It's biology. It's how it works. We'll get to some more questions here in a moment. Just want to thank our sponsor real quick for today's show. I got a lot of more questions here I want to get to here. So just give me a second here. But I do want to thank our sponsor for today's show, our friends over at Lear. Now, what's amazing about them is, let's say you're not ready to invest in real estate because you don't have the full capital yet. You don't have like $50,000 or so for like a down payment on a brand new construction rental property, but you don't want your money sitting in U.S. currency. Like Natalie and I literally had this discussion this morning during our meeting. We've got money in a savings account that was transitioning right now, and we're buying real estate, and we just bought a whole bunch of silver at the same time. And our silver portfolio is up 17% in the past few months. So we absolutely do not want to have our money sitting in US dollars. And our friends over at Lear Capital can actually help you get set up you can buy like $500 worth of silver. It's so cheap right now. It's half the price of its all-time high, silver. So
but first, I want to tell you about our friends at Lear Capital, because Natalie and I are big investors in precious metals. Yes, we invest in real estate, but a big portion of our portfolio are in precious metals, gold and silver, because of what's happening to the US dollar. It's no secret, if you're tuned in, then you need to know that experts are predicting a big recession headed our way. One economist just said, this is the beginning of the end for the US dollar. So,
yeah, exactly. So if you got to think about this, the beginning of the end for the US dollar, when you see what's happening right now in Africa, it doesn't take a genius to see what's happening in Africa right now. And all of these countries that are moving away from the US dollar, and they're moving towards the Chinese yuan, they're moving towards the Russian ruble. So again, I don't want to have any of my money, maybe just a little walking around money in US dollars, but I absolutely want to make sure that I have money inside of gold, silver, and real estate. That's it. That's it for me. That is where I build my wealth and keep my wealth. And I look at gold and silver as wealth preservation. That's the way I look at it. Because if I take $100 and I put it into silver, it's going to sustain itself and it's going to be protected, as gold and silver have done for thousands of years. And then when the US dollar does whatever the US dollar is going to do, then I don't have to worry about that crazy volatility. So if you want to get a free gold kit right now from our friends at Lear Capital, in fact, I've got some gold coins right here on my table. I've got some gold bars, or silver bars, and gold coins right now. You can buy it and get it sent to your home. You can store some locally, just so you have some stored locally, or you can have it stored in their storage. Like they'll help you out with having it stored off-site in storage, so you're not keeping it in your home in a safe if you don't want to. So call their 800 number, 1-800-450-1008, or go to learmorris.com to get your free gold and silver kit right now from our friends at Lear Capital. Again, call their 1-800 number. They love to talk to you on the phone, 1-800-450-1008. Just write that down, and they will be happy to jump on the phone with you to talk about investing some of it. And that's what I love. So if you're going to invest in real estate, maybe having 5, 10, 20,000 that you got set aside, putting that in precious metals to protect it against this volatility, and then adding more to it over time, and then converting that gold and silver into a down payment on a rental property. That's the goal. And that way you're protected against this volatility right now. Because if you've got money in a US dollar, every day that it's in the bank, it's losing money. It's losing value. That's the truth. That is the truth. All right, let's take some more questions here. A Barry Hill says, when I booked a call just now, I didn't get a confirmation. It just went back to the book a call page. Okay. That's a good question here. Maybe let's just make sure the team, maybe there's a lot of people trying to book calls right now on our website. So maybe something happened there. We might have gotten hit with a lot of people trying to book calls with us at the same time. So just try it again. Just make sure that it's confirmed. You should receive an email. Can you check in your spam folder and just make sure it didn't go to a spam folder or your junk folder, okay? When you booked a call, but we will try to be in touch. If you didn't, please reach out to our team and we'll see what we can do here. Okay, let's see. Wake Dog, let's answer this question here. My home is an asset. Yes, I never said it's not an asset. I said it's not a performing asset. Very different, right? But you're saying my home is an asset. I have a 2.25% 30-year fixed, put no money down, and the VA pays over 100% of the mortgage. That's a totally different animal too, by the way. A VA loan is totally different. If you can get a VA loan, that's free money from the government. Absolutely. Totally different scenario. Okay. But you can't use it as an investment property. So that's the least that our government should do to thank you for your service to our country, is provide a loan like that for you. That's the least they should do. There's way more that they should do, but that's the least that they should do. These defense contractors, they're pushing towards about $800 billion a year for a defense budget. Our veterans are woefully undercared for. So that's the least they should do. Anyway, that's a totally different scenario. If you can get a VA loan, brilliant, great, absolutely. But what I would say is to think about is if you're a veteran, is it possible for you to buy a duplex that you could live in one side of the unit and then rent out the other side of it with a VA loan? Because with a VA loan, you have to live in the unit. You have to live in the property. Something to think about, as you invest. We try to do these once a week. Cool 7055. It's been a little crazy with summer right now. We're trying to get into a more set schedule as we head into the fall. Okay. Joel wants to know, what are the average costs? We have a wide range of properties. So again, Joel, when you book a call with us, it's not a one size fits all. We don't just have like a cookie cutter, like here's a home. Like we have a wide range, okay? In the 100,000 range, up to over 300,000 range. And single families and duplexes. And we're going to talk with you about your goals and see which one fits for you, okay? See what makes sense for you. See what financing you qualify for. And okay, maybe the duplex you don't qualify for, maybe the single family you do. So we'll talk with you about those things and see what you have to work with. A lot of people don't even know that they have a 401k or an IRA that they can borrow from. Or they have an old IRA that's been sitting there doing nothing that they can convert over and use as a down payment. So there's all sorts of ways, and we'll talk with you through all of those things on the phone. So it's not a one size fits all, but that's, a basic price range. Let's see. Cool wants to know, great question, Cool 7055. Are you still watching? Cool? Let me know in the chat if you're still watching. Cool wants to know, this is a great question. I'm glad you brought it up. Cool says, will I own the trust deed to a single home property if I get involved in your investment program? And I would say this, we don't have an investment program. We help you buy rental properties, brand new construction that you own 100%. You'll get the deed to the property. You own it 100%. There are competitors of ours out there. And again, this infuriates me. I get so angry about this. I just learned about this about a month ago. And this is why, if you've seen a few videos of mine recently, it's because I just learned about this garbage. There's a company that you don't own the property 100%. You literally have to form an LLC with this guy. You form an LLC with them. So they become a part owner in your investment. That's garbage, in my opinion. That's my opinion. Okay. Maybe whatever. That's just my opinion. But no. You own it 100%. You're not forming an LLC with me or any of that garbage. You own it 100%. You get all the cash flow. You can sell the property next week if you want to, which you'd be crazy to do that. But anyway, you can. And our team, our customer service team, helps you build multiple houses in your portfolio over time. And it's fully managed with a property management team with a minimum return of 18%, internal rate of return of 18%. Again, it's maddening that someone would do that. Like, hey, you got to partner with me on an LLC. Don't fall for that garbage. And also, do not pay more than the appraised value of a property. Never do that. You can fly to town and meet our team. You can walk the property yourself. It's totally up to you. But the bank, to lend you the money, is going to do an appraisal. They're also going to do their full inspection. You can do a full inspection. You can do your own appraisal. Doesn't matter. You can do it all. But you should not pay more than the appraised value of a property. Ever, ever, ever. Ken says, yeah, precious metals are a hedge. Well, like our precious metals portfolio is up about 17% so far this year. So yeah, it's a good investment. But I buy silver and gold not because it's going up in value. I buy it to keep it where it is, wealth preservation. You know, I almost think of it like getting emergency food rations for your house. I look at it that way. You know, it's like, it's a way to take this sort of phony fake US dollar money and convert it into actual something that's lasted 5,000 years and has been a hedge against wars and famines and you name it. Oh, good. Barry Hill says it's all booked now, all sorted out. Good. LI says, how do I know the actual, this is a good question, actually. How do I know the actual gold you buy is physically there for you if you store it in the facility? Like how the feds say there is this amount of money we have when there's not actually any cash. That's great. You can actually go to the facilities and see your gold. You can actually go and actually physically see your gold and silver. It's marked and it has a serial number written on it. And you know exactly where yours is in the facility. So, you know, you can store it off-site. You can store it in the United States. You can store it off-site. I recommend places like, Singapore, one of the best jurisdictions in the world, Hong Kong, Switzerland. And you can fly in and you can go see it anytime you want, actually. Heavily secured facilities, by the way. Thank you, Wake Dog. I appreciate it. Paul Pence, what's your opinion of buying tax deed properties? I have bought some and have sold enough to cover all purchases so far. I still have many to sell, or maybe use them to do a 1031 exchange. Yeah, that's a great idea. Why would you pay capital gains taxes on those sales, Paul? You know, if you can use a 1031 exchange and roll those into additional better investments, I would do that all day long. 1031 exchange, that's that's the secret tool of the wealthy, right? Wake Dog. Yeah, that's great. Book a call with our team. Like I always remind you, you cannot eat equity. So book a call with our team and we can just talk with you. And even if you can't work with us or, we can point you in the right direction. Again, it's a free phone call. You have nothing to lose. Just book a call with us and we can talk how to access some of that equity. First of all, the home equity line of credit is one of my favorite form of investing. I love the home equity line of credit. It's how I've bought so many rental properties over the years. So you're sitting on $200,000 worth of equity right now. You cannot eat that equity. You can't do anything with it. Why not leverage it? You could literally, that's about 3 or 4 of our rental properties. Think about it, like a down payment being about 50,000 or so, 200,000 in equity, depending on, 80% to value, loan to value, might get you like 3. You could literally buy like 3 rental properties with that and then have the bank carry the rest of the note. And now you'd have 3 performing assets in one of the best rental markets in the country in your back corner, in your pocket now. And think about all of the tax benefits that you'll now get as a result of that. The bank doesn't get the tax benefits, you do. Now you've got 3 performing assets that you get to write off on your taxes. You get to then have all of the benefits of that. Plus you get the cash flow. And now you've added to your net worth because you had equity in your home. That's how you turn the asset in many ways into a performing asset. It's like if you own a car, it's not a performing asset, right? It's a liability. But if you become an Uber driver and you're using it as a taxi service, that's how you can sort of convert it into a performing asset, right? And the same thing with owning a home you live in. You're sitting on $200,000 in equity. Tap that out and be smart about it. The worst thing that people do is they take that $200,000 in equity and then they go buy a boat, right? They go buy a liability. They buy a car. Or even worse, unless you have to make repairs, the roof, you've got a bad roof on your house. You need to like pull some equity out to fix your roof. I get it. But the worst thing that people do is they take that equity out of the home they live in and then they put it back into the home by like building an addition on their house. Oh my God. Right? They had the opportunity. Now they add a sunroom or they build a new kitchen. No. You can do that incrementally over time, right? But I get it. If you have major repairs you need to do, you have to do it. But a lot of times people see that and like, wow, we could build a pool. Use that. Use it and invest in real estate. I don't care if you do it with us or not, but you're sitting on equity right now. And you could buy in some of the best, Texas is the most landlord friendly state in the country. That's why we build there. We do tons of market research and we build in the best rental markets in the country. And that's what our team does all day long. So you can take that equity and actually buy an amazing asset. Anyway, I'm excited because I love home equity lines of credit. So Wake Dog, you got me excited about that. I'd be, helping you with that. If you have bad credit, will that affect your non-recourse financing? Not terribly, but Ryan, book a call with our team. We have great non-recourse lenders and we can see what your credit score is and they can work with you on that. Really, that's the whole purpose of non-recourse financing, is that it's not about you and your bad credit. It's about the asset that they're going to be supporting. So they don't really care. And you're buying it in an LLC. Carnegie says, how much money do I need to start investing in gold and silver? I mean, $10, for instance, this silver, like a silver coin or an ounce of silver right now, 1 ounce of silver is, I think, $25. $25 for an ounce of silver. It's half of its all-time high right now. So you don't need much to buy like an ounce of silver. Now, gold is a different animal. That's about $1,900 for an ounce of gold. And Bank of America predicts that it'll hit $3,000 this year or in the next 12 months, $3,000 per ounce. So some thoughts there. All right, everyone. I'm losing my voice. Well, Kathy, it's, again, right now with higher interest rates, again, it's a matter of where do you want, what assets do you want in your asset column? Do you want to be able to buy an asset that is cash flowing and has all the tax benefits that you then can use to offset your other income? So a lot of people don't even think about that, just focused on the cash flow. Think about the tax benefits of this. Okay, think about how I can mitigate my taxes by having a cash flowing piece of real estate. How can I then add to my asset column right now with this higher inflationary period and higher interest rate period, and then refinancing later on, or using other methods to pay down this debt? But again, it's either, okay, that cash is sitting there doing nothing for me and it's losing value, or I can actually be buying a piece of real estate that pays me 4 and even 5 ways with appreciation and cash flow and equity and the tax benefits. So all things to consider when looking at that. Joey the Chin says, so you guys build your properties and then sell to companies like BlackRock and Vanguard? No, we don't. No, we do not. We have never sold one of our properties to a big corporation like that. Never, ever. We only work with individual investors. So FYI, we don't do that. Alexis, thank you for your question. I have a whole video series here on the channel about that, getting started when you have no money. It's going to take some work on your part. Again, there's 3 things that you need to become a real estate investor. You need money, you need a deal, and you need people. You need a team, right? So if you don't have the money, I'm not going to put up my middle finger there. If you don't have the money, then you need to really make sure, then you go out and search for the deal, and the money will find the deal. So we kind of walk you through this in a video series here. We'll just look on our channel here on how to do it, and we'll kind of walk you through step by step on how to do that. Okay, but you have to be a hard worker, like I was when I started. I didn't have the money. In fact, I had a terrible credit score, and so what did I do? I had to find the deals. I found the deals, and I became a deal finder, and then I was able to attract the money and find the people, and it all came together. So most real estate investors I know started with nothing. My friend Robert Kiyosaki, who wrote the book Rich Dad, Poor Dad, as he even writes about in the book, he talks about this. He talks about the first property he ever bought. He bought with a credit card in Hawaii. So he didn't have any money. And now look at him. So, most real estate, my friend Robert Shemin, who is a New York Times bestselling author, he started with nothing. I'm just thinking, almost every real estate investor I know had nothing when they started. All of my friends in this business had virtually nothing. It's the truth. I think it forces you to be a hard worker. If you're handed stuff your whole life, you're not a hard worker. You see these spoiled actors, children and all this stuff. Like they're not hard workers. What do they have to do? That's a good question. I'll just answer this one last one. Well, basically, you can even roll it into, again, another 0% interest loan next year with Fund and Grow. So yeah, if you're interested in the Fund and Grow process, using that, if you go to our website, if you go to morrisinvest.com/funding, we have a whole bunch of options on there, but the Fund and Grow option is really good. And if you use our link, you'll actually save some money on it too, like $500 or something. So yeah, you can talk with them about it. They can roll it into an additional 0% loan card, and you can kind of keep doing that over and over again. So something to think about. All right, everyone. Thank you guys so much for this on this Friday. Hope you guys learned something today. I had a great time talking with all of you guys. Have a great weekend. Have a great rest of your early part of your summer. Again, we're going to be trying to do these each week. It's a little crazy right now with summer and the kids being home, and we're traveling in a few weeks. But we'll be back on more of a sort of a set schedule in the fall. So thank you guys so much. Much love to all of you guys, and hope you guys